Hi, and welcome to another segment of the Sequire Spotlight. I'm Carmel Fisher, the VP of Platform Services here at Sequire Shrax, also the host of the show that brings you the up-to-date market news, as well as highlighting some of the companies on our books. Today, we have CEO Todd Davis joining us from Endexx with the OTC ticker EDXC. Todd, welcome.
Hi, Carmel. Good to see you.
Wonderful seeing you again. Excited to hear about all the developments happening with Endexx. Can you just as a start, tell us exactly what Endexx does?
So Endexx Corporation started off as a holding company, and we nurtured a bunch of smaller companies. Our primary concentrations are CBD. We manufacture CBD products, especially in the skincare arena. We are in mass retail in 4 of the largest 8 mass retail enterprises in the country. And then secondly, we're now in the plant-based vape market, looking to offset the loss of nicotine-based products in the vape market and provide healthy alternatives, exciting alternatives in that market.
Yeah, and your drive for wellness for humanity is one of the core beliefs or the core, inspirations for what Endexx does. How does that unfold in everything that you do?
It starts with science. We look to give people the right amount of a product, not just put a label on it and say latest, greatest ingredient in the market. We test it. We test it on patients. We test it with doctors. We define dosing. We define delivery systems. And when you build it from that performance standpoint, you ultimately provide a very good service for the consumer of our products. So we're looking to improve health. We're looking to improve wellness for people, and our products have stood the test of time. We've been in the space now for 8 years, and our consumers that come back over and over and over, they need these products to function properly, to be healthy and well at all times. And that's been the core driver for us.
Excellent. A key word that stood out for me is compliance related to science. How do you maintain compliance with all your products?
Don't shortcut. Nobody likes to be part of a regulatory body, but when you're complying to something, there are guidelines to follow. There are things that you can adjust to. We look at competitors go out there and they try to get around the system and they try to get into different pockets. It ultimately is destined for failure. So from the very onset of this company, we started off as a compliance company. We work with the companies to help them become more compliant. So whether it's a mass retailer or it's a mom and pop shop, or it's even an FDA consultant, we work with them and we try to create industry standards that we can all comply to and stay within the paradigm of OTC products or supplement products or even FDA consumer product goods. And it's a challenge, and it's always changing, but that's the one thing you have to do better than everybody else if you want to stay in this business.
100%. So give us more insight into your key partnerships and any recent acquisitions.
Well, the fourth quarter was really exciting for us. We landed in over 600 Target stores in a new program that they call Male World. It was an introduction to men only. So it was a great way to showcase our Blesswell brand, our men's grooming brand, get it into a mass retail spot. Even during the summertime when things are a little bit slower, we were able to have high impact, good sales, good pull through that sets us up for future sales and rollouts in their store and other stores nationwide. Second, we took that same product line, got through 4 or 5 months of compliance with Amazon, got that launched, and now I put a news announcement out yesterday, we have 13 countries that now carry or can carry the Blesswell brand into those countries and make that offer. So as we build out SEO, we build out reviews, and we build out distribution for that, we're looking at Blesswell to have major impact in the men's grooming and men's healthcare division of Amazon. And then the third thing was super exciting for us is we made an acquisition of a company called Hyla. Hyla is a plant-based, no nicotine or non-nicotine vape company that has really high impact plant-based molecules like guarana, L-Dopa. These are molecules that can replace caffeine, can replace nicotine, that the body likes, it can consume, it's non-addictive. And that market is gigantic. It's growing very, very quickly right now. There's major transition out there where Juul and Vuse and a lot of the flavored nicotine products are getting pulled off a shelf through federal mandate and state mandate. That leaves an opening for us. So we're going into there with a healthy alternative, a product that performs, that people like, can be flavored because it's a non-addictive product. And just in the first 40 days or 30 days that we made the acquisition, we've already taken in a couple purchase orders. We have more coming. We're going to make some adjusted outlook and forecasting on that here in the coming weeks. So that to me opens up the international markets. They're already in 10 plus countries internationally. They'll be expanded out to about 18 countries by the end of this year. And then we can even cross market into our channels where if we're in mass retail, we can represent their plant-based products into the market. And if they're in vape, we can cross promote our CBD products or our skincare products into their markets as well. So there's a lot of synergy here. It's very exciting. We're touching on two of the hottest markets in the world right now, and we're consumer products. So we're at a price point that people can afford. Inflation is not a factor for us, and we're able to maintain our competitive edge there.
Excellent. What about supply chain situations or issues, if any, and how do you counter those?
Well, during COVID, once we saw the tariff piece go up, we actually prepared against that. And when we pre-bought our materials, our ingredients, and our containers, we subverted the whole supply chain issue. Now you carry forward 2.5 years later, we're still in a good position right there. There are supply chain crunches at some of the manufacturers, which can cause some delays in manufacturing if they're kind of slowly piecing it together and coming in. So far, we've avoided any major catastrophe. We've had a couple very minor delays. And as long as we're delivering in for our third and fourth quarters calendar year, we're in a really good spot in which we've been able to really handle those challenges well.
Exciting. Now, Endexx has become known for their diversity. And also there's news that almost all employees, if not all, are shareholders of the company. What is your strategy around that, taking that stance with your employees, and maybe also touch on a bit of your management team?
Well, the diversity part of our equation is our products reflect both our employees, our staff, and our customers. We've targeted people of color, and not because they're people of color, because they have skin conditions that are unique to subsets of different people. So we address inflammation, we address skin issues, we address the cost efficiencies on where a market of products should be placed and how much. Don't overprice something just because it's a really cool product. Hit the market that needs the product. So we have more of an all-encompassing. We don't break it down into individual components. We've addressed every market in the last 8 years from every community that's in the spotlight all the time. For us, that's not the consequence. The consequence is, do we make products that satisfy the consumer markets that we're going after? Do they help? Do they solve a problem for people? It's the people. So that's our primary concern. And then we don't drift from that ever.
Great strategy. Do you foresee any corporate changes coming in the near future?
Corporate changes, yeah. We've done some restructuring. If you look at our recent 8K, we've isolated our two primary companies into two separate operating entities. We've added a new CFO, which takes a lot of burden off of Todd, who was wearing a lot of different hats there for a while. So we've got a really high quality CFO in Stephen Plum. We've expanded our board of directors. We've diversified there a little bit to bring in some more aspects of business as well as healthcare into that platform. And we look to grow those companies. There's even potential where some of them could be spun off and create a new value for the shareholders. Right now, we're concentrating on two primary products. We're scaling with those as quickly as we possibly can, and we're positioning our company to possibly be bought out here in the next 2 to 5 years. Great.
So touch on short-term strategy as well. How do your products differ from what you're seeing out there in the competitive landscape?
They're better. The products are better. They work. We have a really high rebuy rate. We can look at Nielsen numbers. We can look at various different metrics that come from the market. When a person buys a product, do they rebuy the product? If they do, it's because it works. And if they don't, it's either because they had a bad experience, there was non-performance, or something to that effect. since we've been in the business, we've had about a 70% rebuy rate. Now, our products will last somebody for 3 to 6 months, but we get the rebuy rate, then we get the referral, and people talk about it. There's testimony. So organically, we've grown through the value and the quality of the products. That's how you know, and then Nielsen rating has two of our products that are especially featured at Walgreens right now are the top 2 selling CBD products in the pain aisle nationally. There's nobody even close. There's competitors, but there's nobody close in volume or reach right now with our products.
Any guidance for the company's future, at least?
Yeah, I'll give you some guidance. We survived COVID. It was a tough bill. We had over a 50% haircut towards the end of 2020 and all of 2021. 2022 has been very healthy. We're back up about 200 to 250% year over year growth. We're really back on chart in the pathway we were pre-COVID. So we've recovered, we're back, and we're expanding. We've grown from 1,200 stores to over 8,000 stores now with our core product set. And with the introduction of Hyla, it's going to even ramp that up faster. We've had a primary target of getting to $20 million in revenue for the last 4 years. We now have those tools to do that. Hyla brings an exciting component to it. We believe that they'll bring somewhere between $5 and $15 million in our fiscal 23, which today is the end of our fiscal 2022. So next week, it all starts over, and that's where we really see this compound where we're going to go from a $2 billion company to a $20 million company, likely in the next fiscal year. So that expansion for us is what we've been driving for the last few years. I think Hyla is that final component that accelerates it. It opens up us from being a 20,000 to 30,000 store potential to being 50,000 to 150,000 stores over the next 3 years or so. So the guidance is get to $20 million in revenue, $50 million in revenue, on our way to 100, and look for partnerships and consolidation in the market.
Sounds exciting. So looking at the stock price in the last quarter, we've seen a bit of an uptick there. Do you know what you can say accounts for that?
I think there's less sellers. Sellers have dried up a little bit. Those who bailed out during the really hard times were out of the market by the time we got to July. The Senate and the Congress started talking about Safe Banking Act again, and it started to stimulate and put a bottom in the cannabis market. We accelerated through that. Everybody bottomed and came up a little bit, but they all dropped off. And while they were dropping off, for the first time in our history, we've decoupled away from the cannabis industry, and we're kind of standing on our own 2 feet. So in that quarter, we traded as low as 2 or 3 cents, and now we're trading 8 or 9 cents and growing consistently. We're not having a massive spike. We're just graduating up, and we're seeing more and more investors. We can see it through the Sequire and SRAX platform. We see the growth in our investor base. We see the accumulation in our investors, and we're starting to see a full expansion and a more diversified shareholder base.
Wonderful. Would you say that the partnership, as you mentioned, with SRAX and Sequire, I know that you're both a platform and media client, and a lot of work has been done towards that. Be happy to partner with you, but can you attribute some of the success to us getting the story out? Of course, your story is valuable enough and it's noteworthy enough in having an impact. But do you fully kind of believe that the synergy is impactful and a contributing factor to where everything stands at the moment?
I think so. I think, any media channel that's legitimate, as long as you're not paying for some type of pump and dump thing that a lot of OTC companies go through. You look for organic investors, you look for investors that have an interest. SRAX provides a very nice platform of communicating out to subscribers that are looking for these opportunities. So when you do get an investor, it's a real investor. It's someone who has a genuine concern or a genuine interest in making money in that particular part of the market. We diversify ourselves pretty well, and we're always trying to grow our shareholder base. So we're sitting between 10 and 11,000 shareholders right now, and can kind of been bouncing around there. Hopefully with SRAX's help and some of the other investments we've made in sharing our story, we're going to get to 30,000 shareholders here in the next 12 months. When that happens, when you have that kind of growth rate, then you can support the capital markets. You can grow aggressively. You can make more acquisitions. And with SRAC's help over the course of time, I'm hoping that we get there all together. SRAX is an investor in the company by working for stock. They're betting on the future just like we are, and our shareholders are. And that concern, that business model for me puts some real meat and potatoes in the relationship. So we're hoping for everybody that we can maintain this growth path. As long as we keep hitting our targets, the investors that come through the SRAX platform are going to enjoy the benefits of what we're growing as a company. Our current shareholders, which have just been fantastic for the last several years, are really helping us grow and supporting us moving forward. So yeah, I'm super excited about that. And I look forward to implementing every tool that we possibly can.
100%. And of those tools, I would highly recommend the targeting tools, that just gives you the power, that puts the impetus in your hands to really communicate with those shareholders via email, SMS, surveys. I see that being really impactful across the board. So I would highly recommend that you engage with our team to make sure we can assist in getting those communications out. Like, there's nothing to lose, right? But everything to gain.
The tools are there to use, and we just need to implement them. So it's been fantastic so far, and we see real results. I've had feedback from your team that says your open rates are fantastic. They're higher than anything we ever see out there. It's because we have good shareholders. Our shareholders are really interested. When we put out a news release, they want to read about it. When we put out a new development, they're all over it. So that retention and that expansion in our current shareholder base is just as important as the new shareholder.
Wonderful. Back to sales. Where and why do you believe sales are trending?
Trending?
Yeah, where are sales trending for Endexx at the moment?
They're trending because mostly because we've expanded our distribution footprint. COVID was a killer. The reason it was such a tough thing to overcome is the mom and pop shops, the individual companies that have relationships with their customers. Many of them disappeared. 75% of our clients that started from 2016 to 2020 went out of business. So now we're more in an expansive footprint with mass retail. Mass retail doesn't have that same connection with their customers. A customer goes in, they go up and down the aisle, they pick something they think is best, and there's no way to really educate them at shelves. So we think that the expansion there, and now better education tools and better regulatory ways to comply with the language you want to communicate to the public, is going to be very critical for the success of expansion. But it's distribution and location. So right now, being in 8,000 mass retail stores, that's really helping our growth pattern there. The Hyla products, the no nicotine vape products, there's even a bigger footprint there. That's vape shops and liquor stores and convenience stores, some mass retail, but worldwide, that is a much bigger market. You think bodegas worldwide, that's our target market. And there's millions upon millions of opportunities for distribution locations there when you connect with the right distribution platform. So that is kind of that core that's going to pull us forward and pull us through to get the rest of the expansion out that we've been targeting.
Excellent. Todd, tell me more about you. Why this space, and give us a bit of your background.
Well, I was an investment banker in the 1990s. I saw the launch of the biotech industry. And I was kind of a science guy when I came into the investment banking world. So I had the knowledge, I had the science, and I really gravitated towards that part of the market. When the cannabis market came up, I knew there was real potential there. People were getting better. There were benefits that were emerging. And the more we got into the compliance side of the industry, the more we saw targeted applications for molecules coming from the cannabis plant. CBD was like the perfect biotech molecule. And I really just took the approach that if we treat CBD as a biotech company, a life sciences company that's looking to implement change and prove science, that's where we can start. So dosing, delivery systems, things along that line, took all that experience, that 10 years of investment banking in the biotech arena, and really brought it into one sector, which was this cannabis space. So, I don't say I'm a science geek or anything, but biotech and life sciences, you can see changing industries. It changes lives. It's difficult. You're always competing with big pharma, but you're also offering a new avenue, a new form of solution providing for the individual. And that is the challenge. That's what's so exciting about this. When we get to 10,000 customers or 100,000 customers or approaching 1 million customers, think about how many people you're impacting, how many lives you impact. That's the reward. And through the shareholders, which a lot of our shareholders are our product users, they try the product and they go, I've got to get me some of this. So, it's that more of an organic family style operation that's growing into big commerce and big business in the stock market.
Wonderful. Thank you. I want to close off with just asking you to recap 3 key takeaways that you'd like our audience, viewers, investors to take away from this conversation.
Sure. So the 3 things are this. We're going to continue to expand our mass retail footprint. We're number 1 and number 2 in that space right now with our CBD products, and we're looking to take those products, expand out, and optimize that set right there, get us into at least 20,000 stores. The second piece is Hyla. Hyla is taking us international in a much more rapid pace than we had been achieving on our own. That's going to open up the market to at least 19 to 20 countries. That puts us into tens of thousands of locations worldwide. And then third is we're going from being a small growth company to an accelerated growth company that is not far from being a profitable company. Our margins are high enough where at $20 million and above, we start showing earnings per share. And that is that transition point. So this is a really rare opportunity for investors to invest into a OTC market stock that's sub 50 cents in a position that can go to $1, $2, $5 over time with real expansion, real market, sustainable. That is the key takeaway. We've taken all of this time to reorganize, get focused on what we really want to do, execute into the plan, grow this company up to a $500 million to $1 billion market cap, and then look for the exit.
Excellent. Sounds like all the fundamentals are in place, and this is the time to buy. This was Todd Davis, CEO from Endexx with the OTC ticker EDXC. I'm Carmel Fisher, and you're watching the Sequire Spotlight.